Bitcoin and Ethereum hash rates hit all-time highs despite the bear market. Cryptocurrency miners continue to pump computing power into the Ethereum and Bitcoin networks despite their tokens' recent price drop. The hash rate for Ethereum hit an all-time high Monday, May 13th, when it topped out at more than 1,126 terahashes per second, according to ycharts.com, which is a platform that you apparently have to sign up for to even see the charts, which is quite annoying. But Bitcoin's hash rate peaked 2 days later at over 254 million terahashes per second per blockchain. Now, what's going on with Ethereum? What happened right before May 13th? Like, you guys are aware of it. I'm aware of it. Do you think people are putting more hardware onto the network? No, not necessarily. What happened is that we had a 100% light hash rate unlock that allowed a ton of miners to increase basically the power of their light hash rate GPUs by 20 to 25% on average. And that is clearly going to create the new all-time high in hash rate. Now, it's also important to note that before that, basically, because we track it every day here on this show, the hash rate has been stagnant, right? Up until that point, we were sitting right at that like 1.04 to 1.07, not really fluctuating too much. So it's once again important to point out all of the factors that contribute here. I do not think that people are putting more hash rate and buying more hardware to mine Ethereum at this current time, as opposed to Bitcoin. We've been tracking that as well. That is where more power, more hash rate is getting added to the network, regardless of price of the cryptocurrency, and to the point to where the public mining companies have moved from just utilizing their public funding through the sales of stocks and securities, etc., to also taking on debt to continue to expand in this ever-growing competition for finding more coins, right? That's really what's happening here. As of Thursday morning, Ethereum and Bitcoin have both fallen almost 60% from their all-time highs of 4,878 and 69,044 respectively. Nevertheless, the miners that validate transactions on the Ethereum and Bitcoin networks continue to find profit in the work, said Will Foxley, content director at Compass Mining. Quote, hash rate is just going after potential revenue from mining, and as long as there is a gap between the cost of mining and the potential revenue and profit, he said, you're going to see hash rate continue to climb. The hash rate is the computational power used to validate blockchains. The higher the hash rate, the more secure the network, since more validators are securing the network. This makes a so-called 51% attack much harder to execute, as a malicious actor would need to control a majority of the hashing power. As data from the past week shows, the blockchain's hash rate is divorced from the market until a point. I agree that as far as Bitcoin goes, the increase of hash rate is divorced from the market. For Ethereum, not so clear on that. Not so sure. Quote, that point is where the cost to mine a Bitcoin or the cost to mine Ethereum is near equivalent to the spot price, Foxley said. For Bitcoin, you can still mine Bitcoin for a few $1,000s cheaper than it costs to purchase it at spot, depending on your machine. The same goes for Ethereum. In fact, mining Ethereum, i.e. dedicating computing power to validate transactions and secure the network, has been more profitable than Bitcoin for much of the past year due to the former's meteoric bull run. It's also due to the fact that you don't have essentially basically ASIC mining companies restricting who they sell to for a certain price and charging the individual exorbitant prices to basically block them out from ever being able to compete with the rest of the network, and is a huge problem that we've discussed in the past with ASIC mining in general. While the token is down substantially from its all-time high, it's up more than 1,400% since the beginning of 2020. Despite Ether's rise over the past 2 years, it is a little surprising that miners continue to contribute computing power to its network, Foxley acknowledged. We already addressed this in the beginning, and it's a little silly that Foxley would not have his finger. He's from a mining company, Compass Mining. Come on, guys. I've seen you guys get interviewed by Bitsby Trippin, by, I don't know, a ton of different people. Vosk, right? You're not aware of the light hash rate unlock problem? All right, come on. That's terrible, boys. That's terrible. Get to work. After all, when the system switches later this year from the current proof of work consensus mechanism, which requires even greater computing power, to the proof of stake mechanism, which does not, all those video cards purchased to mine Ethereum must be repurposed. But there's a reason for Ethereum miners' dedication. Quote, Ether miners don't really care if they have net loss on their GPU, because that Ether as an asset can also create yield and pay off your miner in different ways, he said. If I was an Ethereum miner, think of all the places I could have earned yield for my Ether over the last 2 years. I could have farmed it a million different places and got a return on that. There are more places to put your capital to work. And that's a fair point, right? With decentralized finance, with NFTs, all this sort of thing, you were able to basically stack. I added a lot of liquidity to a lot of different projects and so on. The question will be, that gets really, really interesting here, first of all, GPU miners were expecting to mine different cryptos, right? Second of all, when we mine those other cryptos, where does the dedication to the ecosystem move to? Moves to whatever the miners decide to go ahead and move to, right? Where does DeFi start to grow, right? Where does NFT marketplaces start to grow? If you have access on a different network to the same tools and the same capabilities to generate additional revenue off of the mined income that you've made, where are you going to use it? Probably within that ecosystem, so that you're not sending it out and paying a bunch of exorbitant fees to get it moved over to Ethereum. I think it's a little disingenuous from two perspectives here. One, like we mentioned, and we'll do one more time, is that we had the 100% light hash rate unlock that correlated specifically to this increase in hash rate for Ethereum. Number two is that GPU miners, so I don't think GPU miners are buying more equipment, first of all. But two, I think GPU miners are mining whatever is most profitable up until that point. But if you pay attention to what all else is going on, you know that we have the migration going on. There are a lot of different coins that are being looked at, and a lot of the smaller miners have already started moving networks. I think that this will become more and more common as the difficulty bomb makes, obviously, the amount of revenue you can make off Ethereum lower and lower and lower. And depending on the price point for the power on each individual miner, more will drop off depending on that specific reason. I also think, like I said, once you see the migration of the miners to other networks, I think you will see the migration of the participation within the ecosystem as well. Now, it's not going to be to a great extent because, of course, Ethereum has first mover advantage. Most people participating within, especially the NFT space, are not even aware of what a consensus mechanism is. And so they will remain probably within the first mover space, provided Ethereum doesn't go down and have a ton of issues post-merge. That's kind of what I'm thinking. Let me know what you think in the comment section below. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.